The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex.
Let's go to Scott in Colorado Springs. Hey, Scott, what's going on?
Good morning, guys. How are you?
We're doing great, man.
I want to thank you for bringing this Nadex platform to our attention.
Oh, cool.
It's one of the most powerful things that I've seen.
Yeah, it is certainly a platform that not only is neat, but what's so sweet about it, folks, if you haven't tried it out yet, is that when you put your trade on, that is your stop. So what happens is this. Everyone's excuses all the time is that I moved my stop, I didn't put my stop. Well, that is your stop.
Yeah, exactly. I mean, it's perfect. You can set your trades and go do something else.
Now, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. Hey, what's going on, brother?
I love it.
How you doing, man?
I'm doing good.
It's great to be back with you here, folks. And bottom line is that yes, been busy buying houses.
Yeah,
No
which is great.
No doubt.
Which is really great.
See what happens, folks.
You're the reason the jobs number was so good.
There's no doubt.
You were the one that was adding to that jobs number.
Folks, it's amazing. Okay, so what happens is that unfortunately the same time that this show is on is when the action is at all these courthouses. Okay, so that's what's going on.
Yeah.
And but you know what? Yesterday I was going to bring up even on the show in the afternoon that what you had is that the aspect of how many people we have.
Yes. When you really take a look at it,
there's no doubt about it. There's no doubt about it.
And really, it's just going to continue to accelerate. And accelerate quickly.
Well, we know
at a fast pace.
That's right. We know how many are coming, and just happens to be today that there's nothing that I'm interested in.
Yeah.
What happens? You know what's interesting here is that what happens is that we're about 4 months ahead of the deal, knowing what's coming down the pike,
right.
And what happens is that you have the holidays, okay, and that slows the filings down.
Okay.
And Fridays are slow anyway.
Yeah.
But it's kind of neat, really understanding where the flow is. Market-wise, though, this is what we have out here this morning. You get the Dow up 57, Nasdaq is flat, S&Ps are up 3.5. You got gold flat, silver's flat, bonds are down 28, and King Dollar's on the move again.
Yeah, on the move big time yesterday.
It's on the move, man. And this is the way this is playing out, folks. Okay, it's a beautiful scenario. Now, what we're gonna if you're a bear, what you're gonna need today? Okay, I was gonna say what we need today.
Yeah, right.
What we need today, thus far, is already there. Okay, the real question is going to be, okay, are you going to get an accelerated sell-off?
Yes.
And which is going to be hard to get today, by the way. Okay. I suspect we're going to get it, but it's going to be hard to get.
Yeah.
And the reason it's going to be hard to get, folks, is that, Europe hasn't died on the vine.
No,
okay?
it most certainly hasn't.
The DAX is still over those highs.
It is.
And, that's a number. But
the interesting thing there is that you had the Bundesbank out. They revised their outlook for the next quarter.
Okay.
Down 1%.
Right.
So, and the DAX has held up pretty well.
Yeah, no, the DAX...
With the euro, moving down very strong, very quickly. Taking back, 6 days worth of moves to the upside in basically 48 hours or less.
No doubt. And, folks, if you haven't test drove the Nadex platform yet, get over here to TFNN. Test drive that platform right now. They'll put $25,000 of funny money in your account. You can actually open an account with $100, $500, whatever you want, and you just give them an e-check and it's opened ASAP.
Yeah.
And these volatile deals, folks, this is when you want it, because the risk versus the reward inside that Nadex platform is extraordinary. It's over the top, really.
Yeah.
I mean, it absolutely
is. Especially on Jobs Fridays.
Jobs Fridays. I'll tell you,
Fridays are great. What a great.
Because see, this is what you had. What you had, folks, on the spikes, all the spikes out here this morning. You could have been on the S&Ps, you could have been in the NASDAQ 100, you could have been in the Dow futures, no matter which one you were in. I happen to be in the NDX 100 using the Nadex product.
Yes.
Flat out,
it
was a huge score.
Yeah.
So what you had is that you had a 10 o'clock score. I had a 10 o'clock one, which already paid off, and I got a 4:15 one.
Yeah.
And so the risk on the deal was $30, and the reward ended up being $400. It could have been $800.
Yeah.
Because now that's unusual. But it's not unusual as to the risk aspect versus the reward aspect.
Yes, right. Well, and it's especially helpful when you got volatility.
Well, what it was, that got down to 26.46.
Yes.
And when it was put on, of course, it was 26.64. And what you had, folks, is that the high, the top of the box was only 26.65.
Yeah.
So it was a joke.
Yeah.
Do you know what I mean? Because it's like, okay, man, I'll take that. And you could actually got the ultimate would have been 10 more points because you couldn't have made more than 26.35. That was the bottom of the box.
Right.
But anyway, check it out, folks, because we're going to see. I can see the way that these things are trading. They're trading tighter. They're trading cleaner. And it's when you really start understanding what you're putting on, meaning risk versus reward. They're getting some big traction right now, but there's going to be bigger traction.
Yeah.
There absolutely is, man.
And really great for a volatile market.
Oh, my God. Forget it, man. Forget it. And we will get this, if you're watching Tiger TV, we'll get my screen's up. What's happening is that I can't find the notebook on it. I got a new computer, and I can't find the notebook, but we'll hunt that on the first quarter. So how you been, man?
Been good.
Good.
Yeah.
Good.
Good. Miss you.
Yeah. No, listen, I miss doing the show. I mean, bottom line, what can you do? Got to go where the trades are.
No question.
This is the big baby. Absolutely. This is the bazooka. The bazooka. It is. No two ways about it.
So, we got divergence that we're not necessarily used to seeing.
Right.
I mean, small divergence is one thing. When you have the U.S. dollar index moving up the way that it did yesterday, with conviction.
Right.
Also, again, this morning moving up.
Right.
Gold and silver not really budging too much.
That's right.
Over the last two trading sessions here. Something's going to let loose.
And
something should be letting loose.
Absolutely. And I suspect it's going to be, see, this is so cool, folks. Well, here, if we look at gold, 1703. But guess what? We get a high volume spike from the low, 1684 today. So it's, look at that.
Now, and what's interesting is that, if you take a look at gold versus silver, gold has been the weak link of the metals out there.
Yeah.
And it's already come back to a swing point. Same, I think, like November 5th, November 6th, whenever it is. And silver has not.
No, listen.
It's also another interesting.
Oh, it is. It's dramatic, too. It's dramatic. It really is.
Yeah.
Now, let's go over to Apple.
Oh, jeez. Apple sauce.
It's Apple on a weekly, folks. What you're going to have is this. Now, all Apple has to do, so it's 10:15 in the morning Eastern Time. Apple's already done 5.8 million. All Apple have to do is 15 million shares today.
Okay.
And on a weekly basis, folks, it has more shares than the last low in November. And what that says is that you are building cars to blow that whole area out.
Yeah, and in a big way, because if you take a look at that retracement on the weekly chart, that's where you're going. The retracement is very shallow, 0.382 retracement, almost really to the penny. If you go from that, which is wild, if you go from the high in Apple on the weekly chart out at the 705.07 down to your low that we're talking about, which is the November 16th swing point, 515.50. The actual number is 589.53. Where it got to. Let's see here. Got to 594.59. You gotta love it.
That's
on a $200 swing there.
I know.
Think
about that.
To be that close.
That's insane.
And that sets up a larger A to B equals CD down.
It's nasty, man. It's nasty, folks. I got a call yesterday from one of the listeners that have been listening for years.
Yes.
And he was relating it to CMGI.
Okay.
Now, CMGI was a high flyer in the 90s.
Yes.
Went from $3, I think it went up to $140.
Okay.
And everyone owned it.
Yeah.
And then no one sold it on the way down and went out of business.
Yeah.
Now, Apple's not going to go out of business. But this is a sick pot, folks. Apple, when you bring this back on a large basis, what is sticking out like a sore thumb, man, Apple's going down to $200. It's like, okay, this is crazy. Believe me, I know it is. But that's where it's going.
Yeah. No. Look, I had Basil was on. Basil and I did the 10 to 11 o'clock show 2 days.
Right.
Tuesday and Wednesday. Wednesday, Thursday, as he was getting ready for his Master Trader
Which
series.
he's doing right now live. Yeah. Right.
So he was taking a look at Apple utilizing the Chapman wave.
Okay.
I was utilizing Apple where I had gone and taken a look at, I had overlaid Microsoft.
Okay.
Because Microsoft made its highs in 1999, December 31st, 1999.
Right.
Never looked back after that, came off its highs. And when you overlay the stock charts on top of each other, they look so similar.
Right.
So, and we're seeing it, and it's playing out as we just simply take a look at trading volume-wise.
And it's also playing out because it has that big bounce, even though we know percentage-wise it wasn't a big bounce. I can just see people saying, oh, no, I either sold at the bottom, then, it just bounced, because when you bounce 60, 70 points, folks, that's big money. There's no two ways about it. Now, I don't think it's big money on a $500 stock. Right. That's because, brought it back just as quick. But I know how people think. I mean, you know what I mean? And, so it's...
Well, and what money managers are not used to, they're used to being able to buy the dips on Apple.
Oh, yeah.
And making out okay.
Right.
So all along the way on the route down here, nobody has done that. So you're going to start to see that shift in psychology.
You are.
Which when you really see that shift take place,
that's right.
Then you really got to look out.
And what you have, folks, in Apple, we talk about short interest a lot. Apple's on a 2.3% short interest. So you don't have shares have to be bought back.
Yeah.
They don't have to be bought back. And the first scandal, of course, has already happened in Apple. That was the guy from Rochelle wanted to make the big score.
Okay.
$1 billion. Okay. He bought $1 billion worth of Apple stock and bought it.
No, I didn't.
What you have, if Rochelle Securities, folks, and it's a shame because, the bottom line is that Rochelle themselves are claiming that it was one rogue trader that bought it on the earnings, and, that's not how broker deals work, folks. Because bottom line, that compliance officer would have got that night and said, that day, because, it's like, okay, hold it, man.
With that kind of
and so what I suspect what's going to end up coming out is that the compliance officer, too, saw it, didn't close it right there and then.
Yeah.
Because there's just no way. But bottom line, they lost everything, on their earnings, yeah. Insane. As soon as I saw it, too, I said, you know what? This is the beginning, because that's like the first scandal.
Yeah.
And you can imagine, no, I'm going to make the big one, and, wild. Let's go to a Fish in Riverview. Hey, Fish, what's going on?
How are you?
How you doing, man? Thanks for calling. Thanks for holding.
Good. Hey, I was wondering about which of the sectors you might look at shorting today by one of the triple ETFs.
Well, we went short the small caps on the open. We're already short the Nasdaq.
Okay. How do you go short the Nasdaq? Which fund do you use? Are you talking about the quid or something else?
Yeah.
I mean, I know TZA, but
the NDX 100.
Okay.
Yeah.
So that's like the quid.
That's right.
All right. So I just didn't know if you were suggesting to go ahead and fire those off or wait for a particular signal or whatever.
We went short on the open, and that's a lot higher than here. I can tell you that.
Yeah.
You can wait for see if the Qs can spike this 65, 45 area again. It hit 65.71 this morning.
All right. Thanks very much, guys.
Steve Rhodes, Tom O'Brien. You stay right there, folks. We're coming right back.
Thank you.
Okay.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, you get the Dow up 53, Nasdaq's down 3, S&Ps are up $2, and we are going to have some action out here, baby.
It's Jobs Friday. That's what it's
thing.
all about.
It's a beautiful thing, man. Action. And I heard, you know, in the Tigers Den, we got a couple of politicians talking at 11 o'clock, so they'll throw a little volatility into the marketplace. Maybe for once, the politicians...
Yeah, we can't just lock them all up in a room and go solve, go do your job.
Yeah, seriously, man. Seriously. You know, yesterday, one of the folks in the Tigers Den was saying they're basically, going home. I said, thank God, man. Let's keep them home. If they stayed home, we'd be better off. There's no doubt about it, man.
Yeah, it's a frustrating process.
It's a joke. What's a joke? What's a joke is that, folks, see, when you get down to the numbers, and this is where that you're going to flat out see that it's just bribery, it's soft money, it's all the payoffs. The sequester deal, does not touch any of us.
Yeah.
It touches all the big companies.
Yes.
So you get a picture of something. All the big companies either hammering the Republicans or hammering the Democrats right now. So the rest of it is all BS, okay? Because it has to do with they're going to lose the contracts that second, and it's not going to happen. Right. Because it's like, hey, why not pay $500 for a hammer? This is sick, man. Look at this market. So The Apple, folks, is going south once again. This Apple deal is a big deal. I mean, you know, we're at 6 million right now, and Apple's going to basically, you know what's interesting? Did you see Cook yesterday? Cook was coming out with some good propaganda.
Okay, I just saw just a couple minutes maybe this morning. David was talking to me about it yesterday.
Yeah, the propaganda out there with Cook, folks, he was with Brian Williams, and you know, so they're going to set up and start
making a Macintosh or something somewhere here in the States.
Give me $100 million, folks. It's like a quarter. That's like pocket change, okay?
Yeah.
And then, this was coordinated with Foxconn, because in the afternoon, Foxconn came out and said that they're going to start producing in the United States.
Oh, did they?
Well, they're producing in California right now, in Texas, and they start producing more. The bottom line is that it's public relations, and that's about it.
Yeah.
You know, because I mean, we know what it's about. It's about price, period. You know what I mean? You know, there's no ways around it, folks, okay? You can argue all day long that whether, you know, we like where things get manufactured, none of us are willing to pay anything more for them. So,
well, and look, you know, they've got the pressure. Just take a look at the mobile devices out there being sold.
Oh, totally.
So the competition is just so much different today than it was years ago.
Oh, no doubt.
For them and the devices and the whole thing.
No doubt. No doubt. You know what's wild? Think about this. You know, think about, number one, how creative Steve Jobs was.
Yeah.
He changed everything, right? Everything. The way we listen to music, okay? The way we go on computers, everything, right? And then, you know, he had to run, the poor guy dies, and it's like, wow, how does that work? Do you know what I mean? It's like, you know, just in life I'm talking about, folks, okay? Because in order to basically, I don't think anyone wanted to follow him. Do you know what I mean? It's like, you know, that's like, you know, well, what are you going to do?
Look,
right?
his and Wozniak. So their dream originally when they started Apple was to be able to have a computer in every house.
Okay.
Okay. So that's really where the whole dream started there.
Right.
You know, was not able to make that happen, tried to make that happen, and their way of doing that when the computer industry really first spawned was to go through the education system.
Right.
So they said, okay, they were thinking long term.
Okay.
And so if we do it through the education system and students that have used Apple will just continue to migrate up through high school and college and then into business. And that was really the plan, longer term plan out there.
Which they finally did.
Wow, that's right.
That's
because
crazy.
when you really take a look at the mobile device, it's really a computer out there that's an all-in-one encompassing type unit. So he eventually did achieve his outcome, which is really nice.
Listen to this. Know? This is so cool, folks, okay? Because we're talking about this. And if you remember that when Steve and I were talking, remember, we had a conversation, and what it was is about my son and what device that he would get. So picture, folks, inside the company we get a bunch of phones, okay? Now, years ago, we had all Blackberries, okay?
Yes.
Then we went with, you know, the Google, the HTC Googles, okay?
Yeah.
And the contracts are coming up, and what the conversation was about before, I said, this is going to be really interesting to see.
Yeah, this is, right, I remember that.
What my son Tommy, who's the chief operating officer, goes with. Well, bottom line, he texted me last Friday night, right?
Yeah.
Guess what?
He went Apple.
S5. He went Apple. I might be next. You never know.
I love it.
Oh, my God.
Choices, baby.
Steve Rhodes, Tom O'Brien, all you Tigers and Tigresses, you stay right there. We're coming right back, folks. The Dow up 48, Nasdaq down 5, S&Ps are up $1.50. We're going to be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes from O'Brien. Appreciate you growling and prowling out here with us. Folks, if you haven't opened a Nadex account yet, come over to our website at TFNN. You'll see the Nadex banner on the top, on the side. You can open a funny money account right now. You can deposit $500 into it, put an e-check in there. Bottom line, folks, you want to understand how this platform works. It's a dynamic platform. When you set up trades, risk versus reward, you're going to see the dynamic difference. And we're talking the difference that's dramatic, meaning your trade is your stop, which is
right.
Is just absolutely wild.
No question.
It absolutely is wild.
No question. So we're about 17 points away from the false break topside in the DAX.
Oh, that's heavy,
which was just
man.
a one-day, which was a one-day deal.
And we have an hour and 15 minutes.
Yeah.
Yeah, that's going to be a big one because the DAX has been screaming, meaning it stays at those highs. And the correlation with the DAX and the NASDAQ is right there.
Yes.
It really is. And our NASDAQ, folks, is weaker because there goes Apple.
Yeah.
Oh, an apple a day keeps the bull away. Let's go to, I have so much fun with you on these programs.
I love it.
You got to do the program in the afternoon.
Right,
that's what we got. I'm serious, man.
All right, we will.
Let's go to Joyce in Clearwater. Hey, Joyce, what's going on?
Oh, hi. You might have discussed this already, but I heard you talk the other day about Apple going to 384. How are you getting the 384 price?
Let's take a look. So I actually give you I'll give you a $200 price.
I can't do a $200 price, but tell me about.
I don't blame you, but 384 goes like this: 594 is the B point, C point of an ABC down. It's a 205. The first leg down was $205.
Okay.
So the way an ABC structure works, just a 1-to-1, is A to B equals C to D. So if A to B was $10, C to D is $10. The correlation there is that in the confirmation, that the probability would go higher that you'd actually get that, is that when it goes after 505, on a daily basis, if it had more than 45 million shares traded.
But what we've got now is we've got the weekly, which is even more important because the larger term picture. So on the weekly, all that you need to see today, or if you do see this today, so if you see it close below 515.50 on more than 93 million shares, which is what we're going to have. So it's going to have the volume. So volume is not the issue. Now it's really just a price point.
Right.
So a close below 515.50, 1-to-1 like Tom was giving to you, that number is 405. But the reality is it'll do more than a 1-to-1 A to B equals CD. So that's when you start getting into, more than 1-to-1. Is it 353? Is it 288? Then Tom just simply going over to some large volume bars out there, and also just trying to identify it with that. So that's how you put it up, or you take a look at the monthly chart. But if it breaks that level, that's the way the ABC structure works. Accelerated volume,
so
quality volume.
515, and you're subtracting 205 from it, right? Is that what you're doing? I'm sorry.
Well, you're taking the level. Take the number of 705.07 and subtract. So that's your top. That's your high on the weekly, and the low is 515.50. Take that dollar difference. You take that dollar difference and subtract it from the high, which is going to be 594.59. It's the high of this week, and that gives you your 1-to-1.
Yeah, the easiest way is go to Amazon and get my book. It's real clear in there how an ABC works. It's all of $20. Okay, so
yeah.
Okay.
What are you trying to do with Apple?
Nothing. I just wanted to explain to someone how you got the 384. That's because I heard you talk about the 384 price. I wanted to get an explanation.
So the first leg is 205 points. The B point is that 594, and you just take 205 points off 594.
Okay, thank you. I appreciate it.
Okay, have a great one. Have a safe one.
Okay, bye.
And there's no way that person is going to believe a thing that Joyce is saying.
Oh, no question.
And it's not. And
that makes a great Christmas present. Get 2 books, not just one.
And what I'm saying, it's great that you're doing that for that person, Joyce. There's no doubt. But they're going to look at you like you got 8,000 heads. Okay? Because I can tell you I've been out with dinner with people.
For sure.
Okay?
For sure.
And they'll look over, and I had one friend that actually sold Apple at the high, and she was all upset. This is is actually one of Angie's best friends.
Yeah.
And she was all upset when it came down and started going back up again.
Okay.
Now it's hilarious. We're going to be with them this week.
It's like, I love you.
We're going to be with them this weekend, so it's really funny. Now it's down 200. I'm sure she's going to be elated.
That's right.
I mean? So
absolutely.
Let's go to Ken in Madison. Hey, Ken, what's going on?
Good morning, you two. We're doing great here.
Oh, cool, man.
Good.
I'd like to have you take a look at FCX.
Don't touch that thing, man.
Okay, well, that's what I was wondering. I was wondering how far it's going to go down.
It's going to go down a lot more further than this. You get Freeport McMoran, folks, okay? It's up $1.70 right now after getting smoked and coming down the $12. This has so much work to do, it's sick. Listen, it's a great stock, okay? But if a great stock has nothing to do with great price.
Yeah, Apple's a great.
Exactly.
Apple's a great company.
Exactly.
Freeport McMoran's a great company.
Right.
Yeah.
Let it go test 27. It's going to go test it, and we'll see whether it's going to blow it away or not. Do you know what I mean? So,
okay,
and you're at 32.
You got time to look at TLK at the telephone company?
TLK. Let's see what she is. Okay, so Indonesia Telecommunications Company. Okay, so the lows 29, the high's 41. They pay a 7% dividend. So are you going after the dividend, Ken? Is that what you're doing?
Well, I've owned it before. I sold it when it was up about 40, 50 somewhere along there, and it looked like it might be a good buy right here.
Yeah, I see what you're looking at. Okay, so what he's looking at is this. Last time with volume, $36.70. You had $37.60. Let me pull it back further. What we don't have here, and what you're always looking for, even on the buys. Oh, there she is. Okay, so no, you don't have it. I wouldn't buy it because what you don't have here is this. You have the support when it's coming down that's stopping it, meaning at that 36.79.
Yeah.
But there's nothing at these swing points higher that's saying it wants to run into those swing points.
Okay. All right. Well, I'm going to be heading you guys a direction next week. So if I don't talk to you before Christmas, well, you guys have a great holiday.
Well, we will.
Also,
and if you're in Clearwater, come on up and give us a hug. Could be a bear hug next week, but give us a hug anyway.
Totally. Where you going?
Yeah. I'm going down to Winter Garden.
Oh, perfect, man.
Place down there.
All right. So we're just an hour away or so, hour and a half away.
Yeah, I know.
You see, it's the building that has the big bear on the front of it. Have a great one, man.
Have a great one.
Let's go to Steve in Nashville. Hey, Steve, what's going on?
Hey, guys, how are you?
Great, man.
First of all, I want to thank both of you and the whole TFNN family for everything you do around these holidays, for everybody that's listening.
Well, we appreciate you being out there growling and prowling with us, man.
Yeah, hey, Tom, I was thinking of, and Steve, I was thinking of doing the swap out like you said in the years past. I have HMY. I'm just down a dime.
Okay.
On very few shares, but I'm wondering what your thoughts are on that. I see it kind of meandered its way down from, 16 or so.
I'd hold Harmony. Harmony and Goldfields is the play. If you're in the gold market, folks, Harmony and Goldfields is the play, period. No, it's
a currency play as well as a gold play.
That's why it's the play.
Yeah.
You know, and it's huge, folks, okay? Because the Rand dollar, okay, is what it's all about. And, you know, the Rand dollar's at $8.60. Yeah, I can go back to $8, but these guys are printing money, hand over fist. And they have all the gold. The gold is expensive everywhere in the world. So the bottom line is that to me, that's the play. And I think that's where the big money is going to be made in this next run. And the unfortunate part, when I've seen the last 10 years, the gold market is absolutely insane. Okay, period.
Yep.
Okay,
Yep,
and I know. Anyway, that's where you want to make money, folks. That's where the money's going to be made, and there's going to be a lot of money made. That's going to be a double or a triple. It's not going to be 5 or 10 times, but it's going to be a double or a triple. So
yeah, with regard to Harmony, I see in the last month or so, I don't have a chart in front of me, but it seems to be hitting its low point again, 750-ish.
That's right. Yeah. That's right.
Okay. I didn't know if it was going lower. So
no,
that's right.
No, and if it goes lower, so it's a couple pennies. You know.
Right, okay.
And it's got long term, the monthly's got nice volume at the 1160 to 1530 area. So it's just really a nice setup.
Well, and what I love about the trade is this, folks. Technically it's set up, but fundamentally, if you want to go rip apart a balance sheet and take it with the Rand dollar and the U.S. dollar, you're going to sit there and you say, you got to be kidding me, okay? Because you could. If I had more time, I was thinking about it this morning coming in, I'd write a whole deal up, but I just don't have 4 hours. But I know what it is, you know what I mean?
Yeah.
And the correlation, folks, is sick, okay? The amount of bread is sick that's going to, come in. So it's big money, man.
Right. Well, hey, again, guys, thank you very much, and enjoy your temperatures because it's about 22 here.
Oh, well, come on down. We're sitting at about 74 degrees.
It's a balmy 22. I'm going to go out in my T-shirt.
That's good. No, that'll keep you nice and healthy. That's right. That's good, man.
Yeah. Thanks again, guys.
Okay, have a great one. Have a safe one.
Bye.
22 degrees.
Oof.
I wouldn't even know what to do with 22 degrees anymore. That Reynos in my fingers would come out in about 2 seconds from all that sledding. Oh, I
know the story.
You should see what a baby this guy is, right?
I know the story.
He is such a baby. You
do not like when it gets below 70 degrees.
You weren't even born in Florida. He was born in Detroit, so he got plenty cold. We were in your beautiful town of Portland, folks.
I'm not going to hold it against my parents. I was born in the wrong state.
Oh, man. I'm telling you. It was one of the funniest things. We landed in Portland, and folks, number one, Portland's beautiful, but it was like about 45 degrees. And I thought he was only kidding that he was so cold.
I do not like the cold weather.
Man.
Do not like the cold weather.
I don't like it anymore either.
I know we're talking about currency and sometimes having that be a part of the trade.
Right.
Pull up Sony. My chart doesn't go back as far as yours, but that is truly where we've had the Nikkei. We've had the yen get nice and weak against the U.S. dollar. We've had the Nikkei itself move up, but Sony itself has truly struggled here.
Yeah, it has. It has.
And I just don't know what it's really going back against out there. So it just seems like there's some other troubles perhaps in Sony.
There is.
More specifically,
I really like this. Is that November? Okay, that's going to be interesting. Here, I got to bring it back. I'll bring it back. I'll bring it back 30 years on a quarterly. That's what we're going to have to do. Because I can tell you this last month, in November, that volume was way too high.
Yes, big
That
volume.
shouldn't have happened.
Yeah.
Okay, so on a quarterly, this is where it could get interesting. Oh, look at this, though. Look what it's... Oh, hold it. 1 second. I'm going to bring it back 40 years. Oh, my... See, look at over there.
I love this. I know, there's some volume. I know there's volume, which is pretty amazing.
Look at this. It's going... this is sick. Folks, this is... Oh, my God.
What is that price point?
That's $7.81. So check this out, folks. And it's more volume than we have. Okay, so how does it... This is sick. 1982, the last quarter. So I have this up at a quarterly chart right now.
Yeah.
1982, the high, $7.81, had 111 billion, and we are at 98 right now. And
we still haven't gotten down there.
You had 115 at the other, and then you had 119. That's going to be the buy. That's sick.
Yeah, so which is great.
I
knew your charts went back that far.
Right.
But even still, though, even though that's still the buy, there's still something wrong.
Okay, so watch this.
There's still something wrong out there.
For all you folks that own Apple out here, I want you to go look at this chart.
That's for sure.
You have to go look at this chart.
That's for sure.
Okay? Because what you're going to see in this chart is that at a high volume low, and what happens with a high volume low, folks, is this. Is that once the stock turns around, that's where it's going. And this is, we're talking about stock.
Now that's worth writing a report on.
Yeah, it is. That's sick.
Yeah.
How does that work?
So it's lost 90% of its value because it was in the 160s. It's at $10.
Yeah. Is that over the top or what, man? That's sick.
More than 90%.
Let's go to Brian in Franklin, Mass. Hey, Brian, what's going on?
Hey, guys. Thanks for taking my call as always.
How you been, man?
Very good yourself?
Good, man.
Talk about high volume low. I'm looking at Starbucks. I know it's near and dead a hard time, but I just wonder if it's going to test that 43 to 45 level again.
Oh. Are you're not shorting it, are you?
No, but I've been looking at it. It had a 3-point move this week after a...
Yeah. Don't short it, though. This is what you have, okay? The reason I'm saying not short it is this, folks. Now, this does want to go down to 43, okay? But not right now. And the way you do that correlation is this, okay? So you came down to 43, but you never broke a swing point. So you got to remember, swing points are where you talk, walk, and squawk, okay? Didn't break one. The swing point on this is all the way down at 33. Then what you did, see this week the acceleration up? That puts it into a consolidation. So we already have 55 million shares. That puts it into a consolidation. So that other high volume swing is up there at 56 to 61, you want to go all the way up there if you want to short it. The short position up there is like 56 into that level if it has lighter volume in.
So you'd actually wait till you got even lower to buy it, though, if I wanted to...
It's too late for the buy now because you get 3 points.
Risk reward.
Yeah, you get 3 points in the upside, but it does want to go to that 43, man.
All right, thank you.
Cooking, brother. Have a great one, man. Have a safe one. Steve Rhodes, Tom O'Brien, you stay right there, folks. We're coming right back. We had the Dow up 34, NASDAQ down 9, S&P's off 1.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for.
Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us out here. Folks, if you haven't test drove the Nadex product, get over there at our website at TFNN. It's a great product, a great way to basically minimize your risk with a nice, large potential to the upside. As you're over at TFNN, don't forget about the Tiger Dollar promotion. You want to make 25% immediately? Well, yes, guess what? Yes, you can do it with the Tiger Dollars, folks. You buy $500, we give you $625. You buy $1,000, we give you $1,250. No expiration date. They're good on all the products at TFNN. Now, what does happen at this time of the year is that we donate in your name 5% of anything that's bought under $1,000 and 10% over. You end up getting a letter from the Salvation Army so that you can, first off, it's a thank you, but it's also a write-off.
Right.
And, you know, last year we gave thousands of dollars, and I expect it's going to be the same thing this year. You know what's cool, too, is that Tommy called the Salvation Army, and the guy was elated. Because you can imagine, I mean, it's a great organization, folks. Yeah. I mean, it's just a fabulous organization. The administration costs are like nil. They have so many volunteers that are out there. And they truly do take care of basically, you know, whether it's the fires, whether it's the people with nothing.
No, it's great, and like you've identified, you know, the smallest percentage as far as administrative costs.
Oh, big time.
You know, coming out of every dollar that's really contributed.
Right.
You know,
because those administrations, they drive me crazy.
That's right.
I mean,
that's right.
You know, because this is not one of these, you know, non-profits that, you know, the CEOs and the board takes all the bread.
That's right. That's right. And so, you know, most of our listeners, you know, they going into grocery stores a couple times a week.
Oh,
and
yeah.
Probably dropping, you know, a few bucks or what have you.
Definitely. Right.
And so now here's another way for them to be able to actually, you know, do in essence the same thing and then help themselves out.
No, exactly.
You know, by investing in themselves as well. So it's a great deal.
Yeah, no
great
doubt.
deal. And that way, you know, we've been talking about the XLF.
Right.
Has been the financial sector has been pretty strong.
It has
not been weak.
Oh, it has.
As on the shorter term basis, not going back to the 2007 highs.
That's right.
But what it did do this morning,
this is nice.
It did tested the swing point from November 6th, you know, which was 1601. It got up to 1602. You gotta love that.
And this is what you need. What Steve's talking about, folks. This is where it's cool once you start understanding how tests go.
Yeah.
You need this because, you need this if you're a bear. That's sad. Folks, I don't pick to be a bear of a bull.
It's really whatever the chart. That's right.
When, you know, I got a call yesterday, and, you know, it had to do with the S&P, you know, going all the way up with no volume. And I can tell by the tone of the call.
Sure.
It was like, well, things are different now. Do you know what I mean? He wasn't saying that, but things are never different, folks. If you don't have demand, the price is not real, and the price is going to crash. That's the end of the story, you know. And
Sony is a great, you know. It's just the question is it's a timing issue. Not necessarily sure the timing.
That's right.
But you know, it's Apple, it's Sony. It's just simply the markets.
And look at the DAX.
You know, and the DAX. Oh, no question. Yeah.
DAX gave it up. Yeah. You want to wrap your head around between the
just
DAX.
The correlations. Just overall, the correlations in the market. That's right.
Exactly.
Yeah.
Exactly.
Which is why in the morning, when I'm kicking the show off, we're taking a look at what's going on around the world and then explaining to people what it actually means versus just saying, here's where it's at.
No,
here's where it's at doesn't really mean anything.
No, it doesn't. It matters why it's there.
Exactly. Yeah. So, you know, financials been pretty strong recently in there.
There's no doubt.
You know?
There's no doubt, man. There's no doubt. And don't forget, folks, that you can get all the programming. We start 9 in the morning, go to 6 at night. All that programming you can get on your cell phone, tfnn.mobi. But you can also just, on your cell phone, just go over to TFNN on the right-hand side and get Tiger TV.
Yeah, that's beautiful.
Steve Rhodes, Tom O'Brien, we appreciate you growling and prowling out here with us.
Have a great weekend, folks.
Great one. Safe one. Talk to you this afternoon. You stay right there. Who's coming up next?